Hey, what's going on everyone? It's financial freedom! If you're a real estate investor, you're probably wondering if this is still a good time to invest in real estate, or if you should consider other options like the stock market or cryptocurrencies. It's a valid question, especially with all the uncertainty in the market right now. For full transparency, I've been investing in real estate for about a decade and a half. I've seen the market go through its ups and downs, and I've learned a thing or two about what it takes to be successful in real estate, no matter what the market's doing. My goal with this video is not to tell you what to do because I'm not a financial advisor. Instead, I want to show you what's happening in the real estate market so you can make smarter investment decisions. In this video, we're going to dive deep into the current state of the real estate market, explore potential changes in regulations and taxes, compare real estate investments to other asset classes like stocks and crypto, and most importantly, I'll share some strategies for how to win as a real estate investor in this economy. So let's kick things off by addressing the elephant in the room, the housing market. Now, if you've been following my channel for a while, you know I like to keep it real, and the reality is, the housing market is a bit of a roller coaster right now. We've seen record high prices in many parts of the country, driven by a perfect storm of low interest rates, high demand, and limited supply. In fact, according to the National Association of Realtors, the median home price just hit a new all-time high, surpassing insert current median home price. But here's the thing, while prices have been skyrocketing, wages haven't exactly kept pace. The median household income is still lagging behind, which means affordability is becoming a major concern for many potential home buyers. This is a crucial point to consider because when houses become too expensive for the average person to buy, it can eventually put downward pressure on prices. Major real estate companies like Zillow, Redfin, and Realtor.com have all released their market forecasts for the coming year, and while they differ slightly in their predictions, there's a general consensus that we're likely to see a slowdown in price growth. Now, before you panic, a slowdown doesn't necessarily mean a crash. It just means that instead of seeing double-digit price increases year over year, we might see more moderate growth in the single digits. This is actually a healthy correction that many experts have been anticipating. So what's driving this potential slowdown? Well, for starters, interest rates are on the rise. The Federal Reserve has already started raising interest rates to combat inflation, and mortgage rates have followed suit. As borrowing becomes more expensive, it could cool down demand from buyers who are already stretching their budgets. On top of that, we're also seeing some signs that inventory might be starting to increase, albeit slowly. More homes on the market mean more options for buyers, which could help ease the upward pressure on prices. Real estate is still a fantastic long-term investment, but it's more important than ever to be strategic and informed about your decisions. Now let's shift gears and talk about another factor that could significantly impact the real estate market: potential changes in regulations and taxes. As you know, the political landscape can have a ripple effect on various sectors of the economy, and real estate is no exception. With the new administration in place, there's been a lot of talk about potential policy changes that could affect both homeowners and investors. One of the most significant areas of discussion is around property taxes. Property taxes are a major source of revenue for local governments, and there have been proposals to either increase property taxes or change the way they're calculated. For example, some lawmakers have suggested implementing a mansion tax on high-value properties or adjusting the tax assessment rates to reflect current market values. Now, any changes to property taxes could have a direct impact on your bottom line as a real estate investor. Higher property taxes mean higher expenses, which can eat into your cash flow and potentially make it more challenging to turn a profit. Another area where we might see some changes is in housing regulations. The new administration has expressed interest in addressing affordable housing shortages and promoting fair housing practices. This could lead to new regulations or incentives related to things like rent control, zoning laws, or building codes. While these changes are often well-intentioned, they can sometimes have unintended consequences for real estate investors. For instance, stricter rent control measures could limit your ability to increase rents to keep up with inflation or cover rising expenses. Similarly, changes to zoning laws could affect your ability to develop or renovate properties in certain areas. The key is to stay informed about any proposed changes and to carefully analyze how they might affect your investment strategy. Make sure you're working with a knowledgeable real estate attorney and tax professional who can help you navigate these complexities and make informed decisions. Okay, so we've talked about the housing market and potential policy changes. Now let's broaden our perspective and compare real estate to other popular asset classes like stocks and cryptocurrencies. Now I'm not here to tell you which one is better because the truth is there's no one-size-fits-all answer. The best investment strategy for you will depend on your individual financial goals, risk tolerance, and time horizon. But let's break down each asset class and look at their recent performance, risks, and potential benefits. Starting with stocks. The stock market, as you know, can be incredibly volatile. We've seen some wild swings in the past few years, from the pandemic-induced crash of 2020 to the subsequent bull market that followed. In 2024 alone, the S&P 500, a benchmark for the U.S. stock market, experienced insert percentage increase or decrease. While past performance is not indicative of future results, it's important to acknowledge that stocks can offer the potential for significant growth, but they also come with the risk of significant losses. Next up, we have cryptocurrencies, the new kid on the block. Crypto has exploded in popularity in recent years, with Bitcoin, Ethereum, and countless other digital currencies capturing the attention of investors worldwide. And for good reason, crypto has the potential to revolutionize finance and offer investors incredible returns. In fact, just look at Bitcoin, which has soared in value from just a few cents to insert current Bitcoin price at its peak. But here's the catch. Crypto is still a very young and highly speculative asset class. Its value is driven largely by sentiment and speculation, which can lead to extreme volatility. We've seen Bitcoin and other cryptocurrencies experience massive price swings, sometimes losing a significant portion of their value in a matter of days or even hours. So, while the potential rewards are high, so are the risks. Now let's bring it back to real estate. Unlike stocks or crypto, real estate is a tangible asset. You can touch it, feel it, and even live in it. This inherent tangibility can provide a sense of security and stability that some investors find comforting. Plus, real estate has historically been a good hedge against inflation. As the cost of goods and services rises, so too does the value of real estate. This is because, in an inflationary environment, the cost of building new homes also increases, making existing homes more valuable. But that doesn't mean real estate is without its risks. As we discussed earlier, the real estate market can be cyclical, with periods of boom and bust. And unlike stocks or crypto, which you can buy and sell with a few clicks on your phone, real estate is relatively illiquid. Alright, so we've covered a lot of ground today, from the current state of the housing market to potential policy changes and even comparing real estate to other asset classes. Now, let's bring it all together and talk about how you can set yourself up for success as a real estate investor, even in this potentially uncertain economy. First and foremost, remember that real estate is a long-term game. Don't get caught up in the hype or try to time the market perfectly. Instead, focus on building a sustainable portfolio of properties that generate consistent cash flow and appreciate in value over time. Speaking of cash flow, that's going to be your best friend in any market, especially in a potentially volatile one. When you invest in properties that generate positive cash flow, meaning the rental income you receive exceeds your expenses, you're essentially creating a buffer against market fluctuations. Even if the market slows down or prices dip slightly, your cash flow can help you weather the storm and come out ahead in the long run. Now, how do you find these cash-flowing properties? Well, it requires doing your due diligence, analyzing market trends, and crunching the numbers. Look for properties in desirable neighborhoods with strong rental demand. Consider factors like vacancy rates, average rents, and property taxes, and make sure you're factoring in all your expenses, not just your mortgage payment. Another key to winning in real estate is to have a margin of safety in your deals. This means buying properties below market value, negotiating favorable financing terms, and having a cushion in your budget for unexpected repairs or vacancies. When you have a margin of safety, you're essentially mitigating your risk and increasing your chances of success. Now, I know what you might be thinking. Graham, this all sounds great, but finding these deals sounds like a lot of work. And you're right, it does take work, but trust me, it's worth it. The more effort you put into finding great deals, the more profitable your investments will be. And hey, if you're not sure where to start or you don't have the time to dedicate to finding deals yourself, that's okay too. There are plenty of resources available to help you, from real estate agents who specialize in investment properties to online platforms that connect investors with off-market deals. The important thing is to take action and start building your real estate portfolio. So, there you have it, everything you need to know about the current state of the real estate market and how to make smart investment decisions in 2025 and beyond. Do you think this is a good time to invest in real estate? Why or why not? Let me know in the comments. And hey, if you're serious about building wealth through real estate and you want to stay ahead of the curve on market trends, make sure you subscribe to my channel and hit that notification bell so you don't miss any of my upcoming videos. If you haven't joined Market Briefs yet, my free financial newsletter, the link is in the description below. In the meantime, remember, knowledge is power, and the more informed you are, the better equipped you'll be to navigate the ever-changing world of real estate investing. Stay tuned for more insights on how to navigate the changing real estate market and find the best investment opportunities.